The conventional wisdom is work hard all your life and retire at 65. Tell anyone you plan on retiring well before you have wrinkles and gray hairs, they're gonna laugh at you right in your face. Luckily, dividend investors have the audacity to break the social norms. With dividends, your money works for you. With strategic planning and disciplined investing, you can say no to a 9-to-5 job. But chances are, you're not going to be the few that can delay gratification. You're not going to be the few that can block out doubt on this journey, make sacrifices, commitment, and have that long-term mindset. You want the easy reward today, the big, shiny objects. You think you're entitled to anything and everything. And even though we're on this journey together, you have to write your own script. I share my monthly dividend journey every single month to inspire others on how I went from making $0 a month to over $350 in passive income in just a couple years. All along the way, we're gonna have fantastic companies that help us with dividend raises, so let's take a look at which ones gave us a pay raise in the past month. Starting off with, we have Bank of America giving a juicy 9% dividend raise. You don't get much interest just putting your money in a bank account. Luckily, when you become the shareholder, when you become the owner, that's when you really start to profit. Now, don't get too excited now, but Cummins gave a 7% raise, their 18th straight year of dividend growth. The utility company Duke Energy raises their dividend for the 19th straight year, a whole 2% pay raise. How about this company, guys? Energy Transfer gives a 17% raise, the third time in 2023 that they have raised their dividend now. They have a starting yield of 9.5%. Sounds like they deserve their own standalone video. Be on the lookout for that real soon. But for the reason you actually clicked on this video, all of the companies that paid me in July of 2023. So to start off with here, we got paid $3.74 from VHT. This is the Vanguard Healthcare ETF. So with this ETF, it just buys a big basket of healthcare companies. That way you don't need to look up the latest C19 nonsense, the latest vaccines, biopharmaceutical companies. That can get really confusing. With Vanguard's healthcare ETF, you're just buying a bunch of high quality companies and hoping that they go up over time and you get paid dividends every single quarter like I did just right now. All right, after VHT, we also got paid $28.10 from Vici Properties. I'm super close to reaching 100 shares of Vici Properties. They own a bunch of real estate in Las Vegas, a lot of casinos, entertainment options, hotels. $28.10 from them. Once I get 100 shares, I can start doing covered calls and start earning even more passive income when I'm able to do covered calls on them. After Vici Properties, got paid $2.58 from the insurance company Chubb. And then after Chubb, we got paid $17.60 from Jeppy. The Jeppy dividends have really declined this year. Jeppy was of course the yield max of 2022, though these days it's JEPI who these days, as fair weather investors have flocked to yield max and its 70% yielding ETFs like T-SLY. We'll see what they flock to next year when some of their investments don't do as hot as they thought they would. So after Jeppy, we got paid $37.22 from Medical Properties Trust. So talking about companies that have not been doing well, MPW just continues its slide down, but even more importantly, they cut their dividend finally. So many people are anticipating this. Even Stevie Wonder could see this coming. So much controversy with this company, whether they're doing fraud on the side. All still unsubstantiated as far as I know, but a lot of their tenants are unable to pay rent, which of course is gonna hurt MPW in the long run. So I think this dividend cut is a step in the right direction. Will ease some of that financial burden. Remember guys, when companies pay out dividends, that's less money for them to grow their business. So I'd rather them use that money and grow their business, have a strong financial balance sheet, and then we can go from there. So in the meantime, I'm just going to continue to bag hold, continue to collect dividends every quarter. At this point, I've already made my bed. I'm not going to be selling. I'm just going to keep holding on. After MPW, we have another medical company in Medtronic. They paid me $15.89. Medtronic is a dividend aristocrat. They make a lot of medical technology that you find at your local hospitals. After Medtronic, we have Realty Income, not Reality, and they paid me $16.57. This is another company. I'm close to getting to 100 shares, and then once I do that, I'll be able to do covered calls on Ooh, realty income, not reality. This is another company that's really getting hit hard with rising interest rates. That makes it that much more expensive to borrow, which of course, to be successful in real estate, you need to be able to borrow money. So that's going to eat into returns. That's why O has had a really rough 2023. But now you get a chance to get a high quality blue chip company with a starting yield of over 5%. Again, guys, this is why I try to buy investments when they go down, because I know these are solid, great blue chip companies. They're going to go up in the long run, but they might not always go up in the short runs. Always remember that as an investor. As long as they go up in the long run, it doesn't matter how they meander throughout the days. After O, we have Rhythm Capital, the company that was formerly NRZ, paying me $3.59. After this company, I got paid for my uninvested cash with Fidelity, a whole $30.41. I'll summarize how much I made in all my accounts from my uninvested cash, my core position that Fidelity pays a high interest rate on these days. Won't count this toward my dividend income. I also got paid $12.19 from the triple Qs. This is the NASDAQ 100. Strong, innovative companies, very tech heavy. This is where you can get exposure to AI, NVIDIA, AI, and a bunch of other companies that will keep mentioning AI in their earnings presentations. After the triple Qs, I got paid $24.50 from JP Morgan Chase, the bank that is considered too big to fail. I really do need to build up this position, because if Chase ever went under, the whole world is really going to be suffering. So Chase, I think, is as safe as it gets, which is really saying something, because the whole baking industry in general is quite shaky to begin with. Then I got paid a whole 22 cents from SPY, the S&P 500 ETF. Still slowly need to replenish this position after I sold out of it to focus on other investments. After SPY, we have QYLD paying me a whole $18.87. This is a monthly paying income ETF, the OG income ETF. I remember when everyone went wild over QYLD's 12% yield. Now people are saying a 12% yield is way too low because of YieldMax ETFs. What a time to be alive, guys. But unlike YieldMax, QYLD, Global X, these products have been around for almost 10 years. They do have a proven track record. So we'll see if YieldMax can replicate that for years to come. All right, guys, then in my retirement account, I got paid $5.91 from Packaging Corporation of America. This is a company that makes boxes, corrugated products. When you think about how much our everyday world would be impacted if we didn't have correct packaging solutions, you really start to understand why companies like this are super important, why they're super reliable, and why they pay big dividends. After PKG, we have Stag Industrial. They own hundreds of different warehouses across the US. They paid me 70 cents. This is the first time I've ever gotten paid a dividend by Stag Industrial, my virgin dividend payment from this company. First of many paychecks headed my way from this fabulous company. After Stag Industrial, we also got paid $32.02 from Fidelity from my uninvested cash in their money market funds. And then after Fidelity, we have $3.05 from Divo, DIVO, another income ETF. Man, if you thought QYLD's 12% yield was too low, I don't think you're gonna like Divo's less than 5% yield. All right, guys, then after Divo, we round out the month getting paid by X Yield. They paid me a whole $4.65, which went into buying more shares of XYLD, the S&P 500 covered call ETF. Altogether, I had 16 companies / ETFs pay me for a grand total of $195.38. That's an 11.4% increase from last July, when I made just $175.37 in dividends, and then 2 Julys ago, I barely cracked $100. And now 2 years later, I'm on the cusp of nearly doubling that. That's the amazing growth of dividend investing. Predictable, stable cash flows. Even in the short term, over the last 3 months, that's how much I make on average per month. It's now up to $221.87, up $5.13 since last month. My monthly 3-month total, this is how much I make every quarter. I'm now up to $665.61. That's up $15.40 since just last month. Guys, this is how people get rich with dividends. Every quarter, now I'm making enough passive income to have a couple fun nights out, or I can delay gratification, reinvest the dividends, and have even more fun down the line. I also made $63 from Fidelity's money market funds this month. This is uninvested cash that I just have sitting there, earning a 5% interest rate that gets compounded every single month, essentially risk-free money because it's all in US Treasuries. $63 for doing absolutely nothing. For the year, I'm now up to $381.50 from Fidelity. It's just another way to earn passive income. Guys, I'm still probably making more money going to the bathroom at work, but each day I continue to work hard, and one day my dividends will be the ones doing all the heavy lifting. I'll be able to pay for all my bills with my dividend income. Again, not everyone is going to have the patience to make this dream come true, but that's why you need an important group of like-minded individuals by your side, such as what we have with our free Dividend Discord community, where we talk about dividend investing and ways to grow our wealth together. Some also love the 70% yielding YieldMax ETFs. Find out more about them right here. Make sure you guys join the Patreon. You get to see my full $155,000 portfolio, as well as my weekly trades that I'm super transparent about. Leaving a like really helps out a small-time YouTuber. I'd love to hear which companies paid you the most in dividends in the comments below this past month. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.